Item 1, I'll call this meeting of the Finance and Labor Relations Subcommittee to order. Item 2, disclosure of pecuniary interest in the general nature thereof. Seeing none. Item 3, delegations. Presentation by Jim Van Ness. Is Mr. Van Ness available, Madam Clerk?
Through the chair, yes, I believe he is on the line and we are working to connect him now.
Okay. Then I will.
Unmute. How's that? Is that working?
I can hear you. Yes. Could I get a motion from one of the members, Councilor Ritzma? All those in favor? That's carried. If you're ready, Mr. Van Ness, go right ahead.
Thank you. Thank you to you, Mr. Chairman, councilors and staff. My name is Jim Van Ness. Going through the agenda here, I seen the letter that we sent isn't included, so I don't know if you have read it or not, so I'm going to read it here. It was dated July 22nd, 2021, and it goes, councilors, we are owners of 2 of the 3 properties that were annexed into the city of Stratford. The home farm is a 173-acre parcel located on lots 2, 3, 4 in concession 5, Township of Downey, now Perth South. The second parcel was located on part lot 8, concession 5 in the Gore, Township of Downey, now Township of Perth South. These farms were annexed into the city for the purpose of building a float glass plant and other associated ancillary uses. Shortly thereafter, an MZO was created on the home farm strictly relating to the building of a glass plant. It was our belief that the benefits that would have been realized by building this glass plant to the city of Stratford, the Township of Perth South, and the broader community were enough of a reason to allow our farm to be used as a building site. But now, since the glass plant is not going to be built, it is our desire to continue to farm this land as we have since 1967. Since the annexation, nothing has changed, nothing has happened, other than our property taxes have increased. They went from 2020 taxes of $5,100 to payable to Perth South to 2021 being $12,400, an increase of $7,300. Other fees, including building fees for a building permit, are now 3 times higher. We actually paid almost $15,000 for a building permit that would have been $5,000 in Perth South. Services have not altered to this farm. We respectfully ask that the city of Stratford land tax rate be held the same as if the land were still in Perth South for a period of 10 years and then be prorated for a following 5 years to come up to the city of Stratford rate. We are willing to reimburse the city of Stratford tax rate on any land that is sold to the city over this period of time. So that was the letter. I was wondering, would it be okay just talk to this about some of the management report here? There's a couple of errors in here.
Yep.
Also, during the MZO appeal comment period, while the MZO was being appealed and removed, we had requested that the annexation also would be repealed. In the management report, if I go on the first page, it talks about property owner 1, property owner 1, property owner 2. There are actually 2 separate owners now. Property owner 1 is myself, property owner 2 is my brother. Just wondering also if I can get clarification from somebody on staff. Property owner 1 is zoned A1-8. I have tried for a while now to get a hold of staff and I've been unable to get a reply on what the zoning is of A1-8. Our understanding it was still agricultural.
Anybody from staff have an answer to that question? Carmen?
So I can't speak to the zoning specifically, but the owners that are referenced in the management report refer to yourself, Mr. Van Ness, and another unrelated party. So property owner 2 is referencing an unrelated party. So I apologize if I've got the property owner 1. I kind of did put them together, but I can certainly make that distinction now.
Yeah, that's fine, thank you. And also property number 2 was roughly 40 acres that went into the city, not 84. There was already 35, 40 acres in the city before that happened. So if we go to the second page of the management report, it says first ratepayer involved in the 2020 annexation has requested the city to assist them for 10 years, allowing them to pay only taxes would have been due in township per south. The tax rates for farmland are determined as 25% of residential rate in both locales, but City of Stratford's residential rates are higher based on city services offered. I look at this farm and there are no services being offered by the city. We are still located on a Queens Highway. We have private well and private septic system. There are no city services available. We still deal with Ontario Hydro, not Festival Hydro. We still have the Stratford Police as our police force, the same as we did in Perth South. And we still have horrible internet. That hasn't changed either. The only thing we hoped that would have changed is that we could get pizza delivery cheaper, being we're in the city. But this is not materialized. Under the analysis, it talks about an agreement with Perth South and how Perth South is guaranteed its share, and that if the city grants this request, that the city taxpayers, the Stratford ratepayers, will have to ante up the difference and it will cost them money. That is absolutely incorrect, because we would simply be getting the money we overpaid back. It has nothing to do with city ratepayers at all. Further on, it talks about staff not recommending any of these options due to complexity of tracking. I mean, the tracking of a mill rate would be a 15-minute call to Perth South to check it out. And later on, they talk about, in that paragraph, they talk about that we as owners of land took some risk that the property may or may not have been sold. I guess the risk we took is that city councilors would change their mind and not go ahead with the plant. And that's exactly what happened. Further on, it talks about, in the paragraph here on the last page, it talks about a further interest is the intention of the first property owner to proceed with constructing a large agriculture building and possibly a severance. I'm not sure what they call a large agriculture building. We're simply replacing some of the facilities that are on the farm now that are 40 years old. It is not increasing in size at all. The barns that will be there will be coming down that are being used. And the severance application, there has been no severance application yet. I'm not sure where that came from. I didn't realize that was all public. So it talks about financial impact in the last paragraph. And staff talks about if they go ahead with a 3-year option, it will cost the city ratepayers $10,000, $10,200 over 3 years. And it says this is essentially borne by all Stratford taxpayers, as adjustments would be effected through the write-off process that affects the city's bottom line. But that's incorrect, because if we're paying $10,200 too much, we're getting our own money back. We are not affecting the ratepayers at all. And then it talks about the second paragraph talks about if the city works over 15 years, it could cost up to $95,000. And it does not talk about this option. But as I look at it, my farm is paying $7,300 too much this year compared to 2020. Over 10 years, that's $73,000. The 5 years of prorated would be $21,000. And that's assuming no tax increases in the city of Stratford. So for the next 15 years, I will be subsidizing the city $94,000. So I would again request that the Perth South tax rate be used for 10 years, prorated for 5 years, and we are willing to reimburse the city for any taxes on any land it purchases. Thank you.
Thank you, Mr. Van Ness. I'd like to go back to a question that was asked about the zoning. Does Ms. Thompson have some knowledge on what that zoning designation is?
Yes, so just very briefly, I cannot speak to the specifics, but it did revert back to the Township of Perth South Agricultural Zone with the revocation of the MZO by the province on that. So it is Township Agriculture. I cannot speak to the specifics as to what's involved there.
Okay, thank you. Does anybody from the subcommittee have any questions for Mr. Van Ness? Seeing none, I'd like to thank you for your presentation.
Thank you for your time.
Thank you. Next item is item 4, report of the acting director, or no, sorry, 5, report of the interim director of human resources. 5.1, update of the call-in and standby for management policy. Mr. Roach.
Sorry, through the chair, if I could just interrupt, there actually is an item 4.1 of the report of the acting director of corporate services, and that's the follow-up report on the ratepayer request for property tax relief.
You're right, I'm sorry. Did anybody want to move the staff recommendation or anything else? And the request be filed for information. Councillor Clifford?
Yes, I will prove that.
Any questions or comments? Councillor Beatty?
I support that. If I'm not mistaken, though, I think staff are also looking for direction for options for next steps. If I'm not mistaken, to be part of this motion as well.
You are right, Councillor Clifford.
Well, if you want, I would just add whatever the taxes are, whatever the city of Stratford is charging. And like the rationale they have behind that, I believe it's in the city of Stratford. They do have services, but they have a fire. They have fire trucks will come out there. They have the Stratford police. I know they have police before, but I believe they do have the same services everyone else has in the city of Stratford.
So, and I agree that the option to let the original order stand as is, I believe, what Councillor Clifford and I are both supporting.
Okay, thank you. Anything else? I will call the question then. All those in favor? Opposed, if any? That's carried. Sorry, now we'll go to item 5.1. Mr. Roach.
Okay, thank you, Chair Gaffney and committee members. So the administrative review revealed that the call-in pay for management has not been consistently applied throughout the organization. And that resulted in a pay equity differential between staff in the IDS department and the other departments. And applying this policy across the organization would resolve this issue, and it would typically be affecting the IDS department, community services, and social services. So those are the three departments that would typically require on-call or call-in service requirements. The call-in time would accumulate under this revised policy that we're proposing, and it would accumulate in a bank up to 35 hours maximum over the course of a year. And if those hours have not been drawn down from the bank, then we're proposing that they would be paid out at year end so as not to accumulate a liability. The standby responsibilities were also reviewed as part of the administrative review. There are currently multiple people on standby throughout all of the departments, and there is no additional compensation for being on standby. What we're proposing is a standby model that would be implemented in each of the 3 departments where it's required: IDS, Community Services, and Social Services. One person from each department would be on standby for issues arising within their department. And the management, effectively most of the management team would assume standby duties. And that would mean that each person would be on standby roughly every 7 to 8 weeks rather than every 2 to 3 weeks, as is currently the situation within some areas. And we're also proposing that a standby premium of $45 per day, a rate that is comparable to the IBEW's rate and other municipalities that pay for standby. This model would ensure that people who are assigned to be on standby in each department where it's required, and that responsibility would rotate among the management team members. The cost of implementing the policy would be $54,000 for standby. That's $18,000 in each of the 3 departments. And call-in pay would be contingent on the number of incidents where we actually require somebody to be on site after hours. Just for reference, previous years in the IDS department where this was paid out averaged $7,500 per year. So we're asking that you recommend the approval of this revised policy, but I can respond to your questions at this point.
Thank you, Mr. Roach. Councilor Ritzman.
I'll move the staff recommendation.
Thank you. Any questions or comments? Councilor Clifford.
Yeah, I was just going to ask if you're asked to be on standby and you don't want to be, is there a choice? If you're a manager, is it something you have to do, or is there a choice if you want to be on standby or not?
I would say that it depends, because there are some positions for which it wouldn't be reasonable for somebody to refuse to be on standby, but there are other members of the management team that could opt in to be on standby if they felt they were comfortable and able to respond to the issues. But I don't know that we would make it necessarily a requirement to do so. But there are some positions, I'll give it like the supervisor in public works. A supervisor in public works with all the snow events throughout the winter would not be able to refuse to be on standby. That would be a required position. And I think there would be other positions in community services, possibly social services as well, where we would require people to be part of the rotation, but they're also part of the rotation right now. They're just on a much shorter rotation if they're every 2, 3, 4 weeks, rather than trying to spread this out among multiple management team members.
Anyone else? See none, I'll call the question. All those in favor? Carried. Item 6, report of the Acting Director of Corporate Services. 6.1, municipal investment performance for 2020 with a partial update for 2021. Carmen?
Oh, thank you, Councillor Gaffney. This was kind of a long report because there's a lot of information contained within it, but I'll sort of cut to the chase in that the investment portfolio that the city has is performing well. And one of the highlights is with respect to the National Bank portfolio piece, which was opened in 2018 and it was a bit of a new type of product at the time, which are called principal protected notes. They're similar to, I would call like some people might have heard the market linked GICs. They're similar to that, where you have some fluctuation in your gain component, but your principal's protected throughout the duration. So that's kind of the type of product it is. And since 2018, We've had quite a bit of market gains in that portfolio. So what we did is we realized those gains by selling the portfolio components and repurchasing them at the new cost base. So that gives us about a $3 million gain. So that was kind of the big part of that. I really like this product. Actually, I wasn't familiar with it when I came to Stratford, but the former treasurer that got involved in these types of notes, they're able to allow you to participate in the stock market without the risk. The one thing that you are tied to, though, is if the investment doesn't mature for 5 years and the markets are down, you won't be able to redeem them without suffering a loss. So you have to hold them to maturity if the markets are down. But in this case, the last few years, the markets have been quite successful. So and they're highly invested in banks. So that's where the growth has been. So I'm happy to take any questions sort of on the overall basis or on those particular investments, but that's the gist of the report.
Okay, thank you. Anybody have any questions on this first item? Then I will look for a motion for item 6.1. Councillor Bunting, thank you. If there's nothing else, all those in favor? Carried. Item 6.2, municipal debt limits 21-22. Hi, Carmen.
Thank you. Again, another, I'll say a regular annual reporting that was not completed within 2020 as well. So just to give council a bit of an update with respect to any our borrowing limits that are prescribed through the Ministry of Municipal Affairs and Housing, as well as the impact on that as a result of the decisions made to obtain additional debt in 2021. So really what we're saying here is that we have an annual repayment limit, adjusted annual repayment limit of approximately $12 million in the year remaining. So what that means, just to keep it sort of the language a little simpler, is that according to the Ministry of Municipal Affairs and Housing, we would be able to incur additional debt that would be annual repayment amounts of $12 million. So that would result in about 140 to 200 million in additional debt before we would reach our maximum. I don't like those numbers because they're huge, and $12 million added to our annual repayments would be just a completely unfeasible. So it's just to give council a bit of an idea that we do have room as far as the legislation goes to borrow, but just another reminder that any addition that we add in terms of debt repayment does impact the levy. So if we're looking at in 2021 we added approximately an additional $30 million worth of repayment, or sorry, pardon me, of additional debt, which results in about another $3 million or $4 million of additional payments. So it's just kind of just to give council a bit of an idea of where we're sitting with our debt. I'm happy to answer any questions.
So what is our servicing? What will be our servicing costs per year, including the $30 million you just mentioned?
I don't have that figure quite handy. I believe it's around 12 million a year, but I'd have to confirm that for you. I don't have that figure quite handy. So we pay about $8.5 million or $9 million in principal and interest existing. So sorry, I guess it's about it would be the $8.8 million plus the $3 million. So we're looking at just under 12.
Okay, thank you. Any other questions? Councillor Clifford.
Yeah, I've just got a question on that 30 million extra, and we're paying 3 million, both principal and interest. How much of that is principal? Yeah, because it does seem like a lot, to be frank with you, with the interest rate the way it is right now.
Yep, I can give you that information just a second here. apologize for not having this broken down for you right for the report, but so you're looking at about one, and it's like, so again, this is the way that we typically do our borrowing. It's a little bit top heavy for interest. So the interest is paid, more is paid at the beginning of the terms than the end. But at the outset of the new debentures, we're looking at about 1.5 million in principal and another $704,000 in interest. So it's a little bit, that's based on what I'm projecting the actual to be. At the time I wrote this report, I had a little bit of a variance there. So I'm not coming up with completely with the $3 million. I'm a little bit shorter, but it's because I've got some adjustments to the actual loan amounts that are going to be required.
Councillor Clifford.
I was going to add, it also depends on what time the debenture goes out and how much debenture at what time you're doing it. If you do half it at once, or we're planning on doing, like, I suppose we don't know exactly what date or how much we're going to put out for debenture. Like as far as the timing of that debenture.
Well, the annual payments are in a 12-month period. So that's when I'm talking about it in the report, I'm referring to that a 12-month period. From a fiscal period or a budget year or an annual year, January to December, it could be slightly affected, but I'm expecting that we will have those fully funded by the first quarter.
Okay, thank you. Does anybody want to move that item? Councillor Clifford. There's nothing else. Questions? All those in favor? Carried. Item 7, advisory committees outside board minutes. There's none. Next subcommittee meeting will be January 18th at 3:30. And did anybody have anything else while we're still here? I think we just lost Councillor Beatty. But if there's nothing else, I'll call for an adjournment. Councillor Ritzma. All those in favor? Carried.